if the Fed hikes rates in September, which is largely expected, mostly expected, 90% chance, 95% chance, and they reiterate their desire to hike again in December, and 3 more times next year, and 1 more time in 2020. If that forecast is reinforced in September, my guess is the 2 to 10-year note spread will be negative, possibly as early as October, but certainly by year end. So the answer is soon, Brian. And the reason the 2-year note has moved as much as it's moved and why it's at a 10-year high is because the Fed is, relative to the rest of the world, normalizing rates aggressively, and the 2-year note is the most sensitive along the Treasury curve in responding to those Fed expectations.
And will that signal a recession in 2019 or 2020? That's all the talk now. Inverted yield curves can often, but not always, predict a recession or at least a major economic slowdown.
I would say the yield curve, with one exception, 1966, 2s, 10s, or has basically predicted every recession. If the curve inverts, let's say in October, history would say the earliest you'd have a recession would be next summer, next August, and the latest would be August of 2020. Now, it's possible that this time is different and the curve might be sending a bit different signal because long rates are relatively low. Having said all of that, if the curve inverts, I think you sort of have to be on the lookout for recession risk in late 2019, maybe early 2020. Maybe things have been extended a bit, but I do think it's a warning sign. And at that point, Brian, you do need to look for other signs that the economy might be topping out, because what happens at economic peaks, everything looks really good until all of a sudden it doesn't.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.